and welcome to exclusive webinar by ICICIdirect. Joining me today is Kshitij Mahajan, co-founder, Complete Circle Capital Private Limited, to talk to us about one of the most important aspects of financial planning, which is tax planning. Kshitij, what a pleasure to have you on the show today. Thanks a ton for joining in. Kshitij, we're at that time of the year when everyone across the country starts scrambling to make their last-minute investments as we have to file our taxes for the financial year 2021. Of course, this year is an aberration because the deadline has been extended to June 30th due to the global pandemic. But also because of the global pandemic, this has become extremely important this year to sort of make your money work for you. A lot of people in the country, in the world, have gone through salary cuts. And I guess that's why the further sort of importance on why we should be planning our taxes more efficiently. So start by telling our viewers the importance of tax planning.
So first of all, thank you very much for having me here. So for the benefit of all, we need to understand that what is tax planning. And tax planning is a way through which, in a legitimate way, you make your money work for you through the best of the best, planning instruments available to you. So normally, as rightly said by you, when the times are good, normally people are looking at, as per India per se, we are more focused on ATC or ATD. And nobody even tries to look at if there is something else you can do to plan your tax. But I was myself surprised when we started this boutique house that there are more than 9-10 ways else than ATC and ATD where you can actually make your salary work for you by making it more tax efficient. So obviously, and these are all ways which have been prescribed by Government of India, Income Tax Act, and there is nothing which you have to do out of the way. And my sense is that this helps individually, not for this year also, but in the long run also you have a tax planning, in a systematic way through which when you talk about your retirement planning also, it helps in the long run also. So tax planning makes your money more efficient, and it works for you as a long-term investment also very well.
Right. So tax planning should not just be a topic of discussion in March. It should be something we talk about all year round,
right.
Very importantly.
Right.
But let's break this down between short and long-range tax planning, just to help our viewers understand what one should do in March, what one should do at the start of the year. Just break that down for us and give us perspective on that.
When you talk about short-term tax planning, it's a tax planning for the current year, fiscal year. So, again, that doesn't mean that you should look at end of March or Feb or Jan to plan your taxes. The earlier you start, better it is for you. Now, it depends on you what type of instrument you choose. Now, try and understand, when you save tax through any instrument, it will not only help you to save tax, it will add to overall return of your investment portfolio also. Whether it is PPF, whether it is mutual fund tax saver, whether in the insurance plan, or just pick anything which is regarding to investments as a tax plan, it helps that. At the same time, if you look at any medical policy or a term insurance policy, it helps you to save tax as well as to give you the necessary cover which is required by you and your family. So don't wait for the last leg of your tax planning or last time, let's say 10 times in March and Feb to finish your tax planning. You should start this very early in the month of April and May only. Let's say many people will say that I don't have 1.5 lakh to do ATC. That's okay, which is fine. You can start with a monthly SIP, whether in PPF, a monthly installment in the mutual fund tax saver, or whatever you want to do. Start early and get the benefit out of it. This is a short-term tax planning. In short term also start early. Long term, when we say, then at that, when you say long term, we plan for a long horizon. That means for 5 years or 10 years or 15 or 20 years. In that case, we subscribe to a given scheme. Let's say somebody is opting for an NPS, which they want to do for next 20-25 years, which is over and above ATC. Somebody wants to have, let's say, any ULIP insurance plan or some term insurance plan which you take, which gives you a benefit of any mishappening happening to the given person, as well as it is a long-term tax planning also, because every year you will give a premium and every year you will get a benefit of your tax planning also. So at the same time, long-term helps you to plan your retirement well also, because if today you invest and start planning for your taxes also, it will result in a corpus depending on the risk appetite which you can take on on PPF or NPS, or let's say in mutual fund or any other instrument. So that's basically broadly how I describe the short-term and the long-term tax planning.
Kshitij, for the sake of some of our viewers who might have just entered the employment or the corporate world, all of this can be very intimidating for a first-time investor or a first-time salaried employee. Tell us, how should one get started? I mean, what is your starting point at this time?
I know that most of the people will say this is my first job, and I think I have worked hard because I'm going from some B school and I've done my graduation. This is the time I should enjoy this money. But believe me, the earlier you start, better it is. There's a word called compounding, which is the 8th wonder of the world. And it works really well for you when you start early. I know this is not an investment lesson, and most of our viewers, they are very evolved investors. They understand compounding because if they are working on the ICICIdirect platform or securities platform, they are very much aware about how it works. But still, the more we talk about it, the least this has been practiced by many of us. So, for the young investors or the young entrepreneurs or the young job seekers who are joining their first job and started getting their salary. So it depends. If somebody who's having a salary which is as low as less than 5 lakh, there's really no need to plan tax. Till 2.5 lakh, there is no tax. From 2.5 to 5 lakh, there's a tax element of 5%. But yes, if you are drawing less salary, there is hardly any need for you to plan any tax. Having said that, tax planning doesn't only help you to save the little extra tax, but it also helps you to invest and make the benefit of long-term investments also. So somebody who's starting in new, they should look at what all salary breakup they have in their company. Normally what happens, you have a basic salary, then you have an HRA, then you have some medical expenses, some conveyance expenses, and then a subsidy allowance which is there. So basically, basic salary and subsidy allowance are subjected to tax. If you are staying in a rented apartment, your HRA component is taken care in terms of it will go into the rent part. Then medical and your conveyance allowance is tax-free, because normally you end up to many monthly basis, the allowance given is 1250 rupees on the medical side. That's expense normally you do on various medical stuff or maybe doctor fees. So now look at what type of element which is remaining which is coming into the tax bracket. So entire salary is not coming into tax bracket. So what has been given as a deduction is not a part of tax bracket. Let's say remaining salary is 2 lakh or 2.5 lakh. So till 2.5 lakh, there is no need for any tax planning. Having said that, my advice to all my investor or my suggestion here is that start doing some savings from the day one. You have a salary of X, at least 15 to 20% should go in saving. Whether it's a part of tax saving or it's a part of your normal saving, it should go like that. Second, many companies, they make the salary more tax efficient by giving some food vouchers and allowances which are like LTA, which makes it more tax friendly. So it depends which type of company you are into. Many foreign companies, they are very clear. They keep the component as low as 4 components: your basic, your HRA, your LTA, PF contribution, and subsidy allowance. So they are different type of structures. Now you can easily Google it, what type of structure suits you. You can talk to your HR. My request is to speak to your HR, because that's the right person in your company to guide you how you can go about it.
Kshitij, you make a very valid point. If people on this platform, they obviously are investing or trading. And you also talked about, calculating your total income. Let's just take that a step further before we go into the various instruments, and talk to us about what happens to other incomes. So gains from equity or losses from equity. How does that sort of add up to total income and help you sort of plan your taxes better, to save on taxes? Because I know losses can be carried forward, right?
You're right. So, okay, let me make it very simple for everyone. One is your normal salary or your normal business income, which is taxed at the given rate. Now, depending on what slab you're into, let's say you're into 20% slab, this is 20% plus GST, 30% slab, this is 30% plus GST. Now, income which you are generating, the money which you are generating from your equity trading, or let's say from long-term investments, so they come as a capital appreciation. They are not a part of your overall taxable income. Capital appreciation, long-term capital gain in equity, which is if you have any gain which is in excess of 1 year and you have booked that gain. It is not that if the gain is there, unless and you not book it, this is not a gain. If you book that gain, then you are subjected to a tax of 10% long-term capital gain. If you have booked the gain in less than 1 year and there is a gain, then there is a tax of 15%. So this gain comes as a capital appreciation, not as an interest income like fixed deposit. Yeah, the fixed deposit income, interest is a part of your overall taxable part income because it come across as an interest income. So that's on the equity side, the tax component.
But losses, Kshitij, on the same front because that can be deducted, right?
Yes. So any losses which comes, any short-term capital loss which is there can be offset against any long-term capital gain as well as short-term capital gain. This can be offset against both gains. At the same time, if you have any loss, you can carry it 1 plus 8 years, which is like the current year in which the loss is there plus 8 years. So let's say you have that loss in your book, and at any given point in time you have a gain, you can offset that loss against any gain. So that's a valid point which you have pointed out, because many people, they don't look at loss he had, what to do, but that loss can be really helpful to you in any gain which is coming in the future. So just while getting your income tax return filed, give a proper your loss and profit statement to your CA so that he can take that loss into account while going further. We have a country where there's a lot of investment in real estate. Tomorrow you have a gain in real estate that can be offset against any of the short-term capital loss or long-term capital loss in equities. Okay. So believe me, and this loss which you are having, this can be offset against a gain which is 20% in the indexation. So tax component is different in equity and real estate. In real estate, you have a long-term capital gain which is in excess of 2 years. You're selling a property, and if the gain is coming, that's taxed at 20% with the indexation. So it's a different tax slab. So what you're saying is right. So this offset can be a good offset for you.
Right. Kshitij, we always land up talking about tax savings that one can do under Section 80C. We'll talk about it if we have some more time left, but what I want to talk to you about is what happens beyond Section 80C, because I know there are various sort of other tricks that one can use in order to increase or improve their tax efficiency. So let's start talking about beyond Section 80C. I want to start with NPS because that's the one particular instrument that's picked up so much of popularity recently, right?
So yes, NPS is actually gaining a lot of traction because this is over and above your Section 80C. So, and this section allows you to save 50,000 in addition to 1.5 lakh in Section 80C. Interestingly, it has window wherein you can choose between your equity and fixed income allocation depending on your risk appetite. And you can choose between the fund managers also. Like you want to do with SBI or you want to do with some other company, you can choose that also. So, and interesting part is that in NPS you can avail your Section 80C part also, which is 1.5 lakh rupee plus 50,000 every year. So yes, this is another feature, and this can help you if you are in higher tax bracket. This can help you save 17,000 rupees every year. So one can look at NPS.
So of course, 50,000 is a limit over and above the 1.5 lakh that comes in the Section 80C. Also, health insurance premium. I know the government is encouraging people to sort of, start planning in terms of health. And we've seen what's happened in the last 1 year. This has become even more important in today's day and age. Tell us about how much of health insurance premiums can help you save taxes. Is it just for yourself? Is it for your family? Is it for your parents? What are those limits, and what is this section, and what is, of course, recommended?
So, you're right. Pandemic has taught us, the first part of goal planning is your term insurance and your health insurance. The way the expenses are going high, and you see that, initially when this corona started and people started getting admitted to hospital, the bills was as high as 9 to 10 lakh rupees for a normal hospitalization of 13 to 14 days. So health insurance, one is it can help you in saving tax. That's the second part, but it is very important for all the listeners, viewers who are watching this. They should have health insurance for sure for their family as well as for their parents. It falls under Section 80D. And individuals and their families are allowed up to 25,000 on a yearly basis. with your dependent parents who are less than 60 years, there is another 25,000 you can avail for them. For your parents who are above 60 years, you can avail 50,000. Let's say if you are above 60 years and your parents are also above 60 years, then you can avail 1 lakh as a total lump sum. So 25,000 for you, 25 plus 25 for your parent less than 60, 50,000 for them. 25 plus 50 for your parents, if you are young but your parents are above 60, 75 for them. And 50-50 for both of you if you are above 60 and your parents above 60. On an annual basis, you can avail up to 1 lakh rupees as a health insurance under Section 80B.
Right. Also, taking care of disabled dependents, I believe that also is another segment or a section in your tax planning that could help with tax saving. How do we determine what are dependents and what is the sort of categorization and limits that one can avail?
So when you talk about the disabled dependents, so it depends on the situation of dependent, whether it is he's fully dependent or let's say he's half blind. It has different categories and windows through which you can look at various aspects of claiming tax benefit. Like let's say you have someone who's not able to walk, physically handicapped, and you have kept a help, so you can actually claim that amount also. Depending on what type of amount you are paying to that person, you can claim that amount also. And this is a very good way through which you can further, I pray that nobody should have a dependent like that. But if you have, whatever expense is going in his or her medication as well as taking care, you can claim that as part of tax exemption also.
Of course, it helps you take care of your disabled dependents with a lot more ease.
So it's limit is 75,000 if as per given described parameters. If it's less than 40% dependent, if it is more than that, then you can claim up to 1,25,000 on a yearly basis.
Right. Kshitij, what about education loan interest? That's the other one that's quite popular, right?
Yeah, and the interesting part is education loan interest exemption can be taken by parents or as well as or it can be taken by the student himself or herself.
Or not an and.
Yeah, or.
For how many years and what is the limit in terms of how much exemption can you avail?
So once you start paying the interest back, total interest you can avail. Once you start paying the interest back, up to 7 years you can avail this facility. So it depends. Like it's like interest till year interest paid or 7 years, whatever is earlier. Let's say you are paying interest for next 10 years, but you'll be given exemption till 7 years only. But it starts from the year when you start paying the interest.
Right. Also, one last one, which is again outside Section 80C, is tax saving on saving bank interest. Now, what categorizes under this? What is the limit? And of course, is it one bank? Is it multiple saving bank accounts? If you can just help our viewers understand that too. And under what section does that come?
So tax saving, when you say under saving bank account, it includes your bank account, it includes your postal saving account or any other type of saving account. And the maximum limit is 10,000 rupees as the interest which you can avail as exemption. And for that, you need to be a senior citizen. This is totally meant for a senior citizen. This exemption is there. This is not for individuals like you and me. And this falls under Section 80 TTA. So it falls under Section 80 TTA.
Right. So I think that much, that covers a lot of the other tricks beyond Section 80C that, people can use to use their tax or save tax more efficiently. Remember, we're not talking about tax evasion. We're talking about just saving taxes over here. Kshitij, we are short of time, but any sort of closing comments that you'd like to share with the viewers and audience?
So my closing comment will be like, we as an individual need to understand that government has given a lot of windows to make our earnings more tax efficient, and these are all legitimate ways. We need to keep our eyes and ears open. We need to consult the right consultant in terms of our chartered accountant, somebody who's filing tax, to make our tax saving looks more efficient, as well as this tax saving will allow you to plan for your retirement and future planning also. So keep investing, keep going through whatever news happening in the tax segment, and best of luck.
Right. Thanks for that, Kshitij. So yes, take a step back, put your financial goals down, and then plan your taxes. Don't do that in isolation, because then again, it's going to be a wasted exercise and you're not going to really achieve anything at the end of the decade. But great talking to you, Kshitij. Of course, you've got a busy few weeks ahead. So good luck with that and speak soon.